Today is April 2nd for Euro, US dollar. Today's trade is a perfect setup for long. We have Hi everybody. Today is April 2nd for Euro US dollar. Today is a perfect setup for a long trade. Yeah, there was a Fibonacci retracement. Look at 15-minute chart. We had more than 61% retracement of yesterday. That's a very nice, the market, was kind to us. And also, as I use a simple strategy, as always, 1 minute. Yeah, 50 cross 200, moving average on 1 minute, and 5 minute, also 50 cross, 200, moving average. So 3 minute too, of course, the cross above. So did it hit 5-day moving average today? I always, say using, very simple, method, strategy to go either long or short, right? The market. Today we went long, so it hit the bottom, just dipped down a little bit and then bounced off and then went all the way up. So today it hit the low, yesterday's low, and then for just short time and then bounced off, and then there was a retracement. And look at what I did. Let's see, where is my position? Yeah, that's the market. That's what I did. I trade here today. I have 2 positions open, almost the bottom. I get out about halfway, and then I get out the rest, almost, little bit, 50% more retracement. So nothing to talk about. For tomorrow trade, will be interesting. Will be very interesting tomorrow. Tomorrow, since we have a up bar and today's candlestick didn't close below yesterday's close or low. Look at the daily chart of the euro. Today's bar didn't close below yesterday's low or close. What does it mean? That means may have some upside momentum. And also look at today. Today didn't touch the 5-day moving average. Exactly, it didn't. So I assume tomorrow it should test the 5-day moving average or higher, right? Usually when we have an up bar, we have either 2 consecutive or 3 consecutive up bar. So be careful if you have to short the market. Just be mindful. You have to get out, either with loss or small profit. And look at the 15-minute chart here. Look at 15-minute. Using some simple moving average to deal with this market. Look at a 15-minute. We have 200-day moving average. 200 moving average, 15-minute bar, the red line, and the yellow line is 50 moving average. So it looks like 50 want to cross 200 moving average on 15-minute chart. Usually I have done some statistic on 15-minute chart. Usually once it stay above 200 moving average, it will stay there up there for a couple days. What does it mean? That means, tomorrow it might very likely it will hit, anything about 1.08 or above. So those who want to short, just be careful. Retracement might not happen tomorrow. Okay. Those who want to go long, you have to look for a good setup. Okay, let's look at what I think for the short trade tomorrow on the daily chart. For short trade tomorrow, if you want to go short the market, you should wait, let the market come to you. Wait till it hits 1.081 level or above. You can gain early, but at your own risk. I'm afraid I don't think it would be a big profit for short positions. If you go long tomorrow, hit near the bottom, I think that's a good let it wait till it pull back 1.07 74 73 should be a good position for long. Cut loss should be below 1.07. You see the daily chart, the yellow trend line, that should be the support. Once it break below, man, the market crash. So we will see tomorrow, see what happens. Either side, either go short at higher level, around 1.01 above, or long at the bottom, 1.07, 3 or 4. Okay. And again, since we have a pretty good few days for retracement, so tomorrow I'm not sure it will happen. I have a feeling retracement might not happen tomorrow. We have to wait very late, almost the end of the day, then we have a retracement. I don't think we have early retracement after in the afternoon. So this is a setup for tomorrow. Good luck on the euro. Today is April 2nd, and we're looking at the SPY daily chart on the left and 15-minute on the right. I try to make everything simple as possible. And today we had a gap down, quite significant. It's a huge gap down, but it wasn't filled. The gap wasn't filled, and so we missed the short. If those who went short overnight should have a nice profit at the opening, and those who missed the short, then we there were lots of long trade opportunities. Let's look at those long trades, possible long trades today we have. Okay, for the long position, I use some simple strategy again. Use 1 minute, 2 minute. As I always say, 50 should cross 200. Moving average. It did cross on 1 minute chart and 2 minute chart. 50 cross 200. Moving average on both charts. Beautiful setup for long. So how do we get in there? So look at 1 minute chart here. Now you see the MACD we have. Look at the MACD. Usually when I look at MACD, I look for divergence. I don't just look at MACD, the wave, up and down. I just look for divergence. As long as I see divergence, twice, 3 times divergence, that's a signal telling me either go long or go short. So in this case, since it gapped down, it stopped dropping. So when it stopped falling, look at the MACD here. It's obvious. Look at the trend line. This previous swing much higher than the latest swing, and the price went lower as the swing higher. So that's divergence right here. And I think I enter one position here around here, then one earlier at the beginning. That was my mistake. I made a mistake at the beginning, but I caught the bottom here. So you can you can get out here with few points. So you have about, not bad, 1 point, 1 to 2 points, profit. Depends on your desire, how much you want, how much profit you want. So today pretty much it just bounce from the low, trying to fill the gap, but unsuccessful. The gap is still there. And tomorrow, and look at daily chart, it's very interesting. It broke below the channel. Remember, we have a huge channel here. It's been there for a few months. So finally closed below the channel, the bottom channel, and also close below 5-day, 10-day moving averages, and 20 days is support now. 20-day moving average is support. So it did test it. It did test the 5-day moving average. Let's see tomorrow will it test 5-day moving average and 10-day moving average. So looks like the daily chart for sure 5-day will cross 10-day moving average tomorrow. We will see what let the market tell us what's going to happen. But for two things we have to be mindful. First thing, will we have follow through and close below today's low tomorrow? That's important for for being bearish. If there's no follow through and then the close is above, today's close, that's not a good sign for bears. Okay, it might turn around, hit a new high again. I don't know, man. So we'll see. So also, will the gap be filled tomorrow? That's two questions we have to check. So for Fibonacci for the SPY, usually doesn't happen. I would say probably 40% or even less of the time will work. Fibonacci really work in stock market, not as high as a forex currency. So don't count on it. Use Fibonacci for a bounce or pullback. For during the market. So we'll find out tomorrow. We need follow through and also close below today's low tomorrow in order to have in order for the bears in control. Now I'm not sure bears are in control. So again, tomorrow look for 1 minute, 2 minutes pullback setup. Yeah, we are looking at the ES, the futures. It is a S&P 500, and today it tests the 5-day moving average. Look at the daily chart on the left. It tested a 5-day moving average, and then it broke 5-day, 10-day moving averages and closed below both 5-day and 10-day moving average, and hit the 20-day moving average and bounce from 20-day moving average. Also, we have a long channel. There's at least 3 months, 4 months channel here. Finally today it broke and closed below the bottom of the channel. Yeah. So now 20-day moving average is support, and I had a few short positions overnight. I show you what I have here. I feel short position overnight. I took profit this morning. I got out and then look for long trades. I probably have three trades, you know, for the long, and that's it. And then call it for today. Call it for day. And let me show you. The reason I went short overnight, you know, is look at the 240 minute on the right. Look at the chart here, the MACD. It is obvious. It's a MACD divergence. Look at it, right? The swing higher, and then the price. When the swing lower, the price higher. Look at it. It's obvious. It's a divergence. Let's check it out. Yeah, there's a MACD divergence versus the price action. So I held on to the short, and also look at 240 minute. The 5 moving average on 240 is was crossing below the 50 moving average. I figured it should, you know, should go down more, but I didn't know it would, you know, it would go down that much, go down, you know, almost, you know, 40 points, 50 points. And look at the 60 minute again. Is 60 minute. If you look at the MACD, you can tell this is also divergence, MACD divergence, right? Look at the peak of the swing on the MACD versus the price on the chart. There's a divergence also. And also another way to look at it, look at 15-minute chart. It's been sideways at 52.90 levels for a long time, for 6 hours at least. Either break below or above, right? It's been sideways within this channel here for at least, you know, 5-6 hours. So finally the market decided to break below because of the news. You know, I guess the data is too good for the market. They're afraid, you know, Fed will not cut rates soon. Yeah, usually I appeal to, you know, 80% of my trades based on technical analysis. I will look at the news, but that's not my main focus. So mainly technical analysis. I will look at all the indicators. There are more indicators I will show in the future how I evaluate, you know, all my trades. So today we did good. And look at the 5-minute chart here. Yeah, look at the 5-minute chart here. No good. Okay, you look at the 5-minute chart. That's for the market opened around here at 6 around 9:30. 6:30 it shows here, which is, you know, Pacific time. Should add 3 hours, so that means it will be Eastern time at 3 hours, 9:30. As you can tell, look at the MACD. Again, this area is a divergence again. I see divergence here too. Right here. As the price, you know, going down, the swing just going up. So I see divergence. I was betting, you know, the market should be bottom. And then I look for a long trade setup here, around here. I think, you know, let's see, you know, what will happen tomorrow. Hopefully we will have a retracement. Not sure tomorrow it will. Again, you know, for this ES futures, as long as now 20-day moving averages support, as long as it holds there, that means, you know, bull is still in control. Once tomorrow we have a follow through like SPY, it closed below 20-day moving average, that means, you know, bears are in control. So how you know, and also hopefully, you know, if I want to short, I let the market, you know, test the 5-day moving average. If it, you know, tested and didn't go above, then probably I will go short, open up short positions up there around 52.90 area. So good luck, guys. See you tomorrow.